Gold prices are continuing to break new records, with one investment bank predicting the new year could see the precious metal reach $5,000 an ounce. The prices have doubled in less than 2 years, and central banks are now stockpiling bullion amid concern over geopolitical risks. What's driving this gold rush, and is it set to continue into 2026? Hello and welcome to Roundtable. I'm Enda Brady now. The price of gold has surged nearly 40% in the past year. Investors and banks traditionally go for gold when there's uncertainty. And this year they have plunged heavily into gold at a rate rarely seen before, in part because of distrust in another economic indicator, the US dollar. So why is there a retreat from America's currency? And what are the global market forces at play?
For centuries, gold has meant three things: wealth, beauty, and security. And for some cultures and families, major life events feel incomplete without it. But in the past few years, gold's influence has increased and its price has skyrocketed.
Largely, it's been down to geopolitical uncertainty. We've got ongoing global conflicts which don't seem to have come to a head necessarily yet, and off the back of that, growing trade tensions overseas too. And then across the board, more broadly, global interest rates falling.
Sanctions imposed on Russia following the war in Ukraine triggered a shift in the global financial system. The ripple effect of these financial penalties drove investors towards gold. So too did major global conflicts and Trump's trade war. Tariffs started to have an impact in April 2025, when gold was trading at around $3,454 an ounce. The price has since surged to highs of $4,323 this month alone. It's not just individuals and private investors buying, but stockpiling by central banks. They have always owned gold. What's different now is the scale. Countries have been rapidly rebalancing their reserves, buying gold at a record pace to limit exposure to the US dollar. Has it become the safest asset in uncertain times, or will prospectors go bust after this gold rush boom?
Well, let's meet our guests in the studio. I'm delighted to say here with me is Ian King, the renowned business journalist. And joining us from central London, we have Joshua Saul. He is the founder and CEO of the Pure Gold Company. And in Frankfurt in Germany, we're joined by Kai Hoffmann. Kai is founder and managing director of SOAR Financial. You're all very welcome to this roundtable. Joshua, to you, first of all, just give us your thoughts on the pricing of gold, how much it has gone up in the last couple of years.
Well, gold has moved through $4,000 an ounce. It's set multiple record highs. It's gone up about $1,700 year on year. And so the exact number matters less than the signal. You know, this has been a structural repricing, not a retail-driven frenzy. But, you know, as we always say to our audience and to our customers, gold traditionally is used as a barometer of confidence and certainty. And so when we see the gold price rise, it's usually reflective of geopolitical risk, fiscal and political uncertainty. And of course, as a result of that, a desire for insurance and protection, not speculation.
Joshua, I'm told you've got a product to show our audience what we're talking about, how much money is in a very small piece of gold. Just show us what you buy and sell.
So what I have here is a 1 kilo gold bar. This, based on today's values, sits at around 105 to 110,000.
Pounds
about
sterling.
2 years ago, it would have been half the value of that.
Wow.
Just to offer you some perspective, next to my iPhone, it's about the size of an earlier iPhone.
Wow. So Joshua, that's £110,000 worth of gold in your hands. And you reckon 2 years ago it was worth half that?
It would have been worth half of that, yes.
Amazing. Kai, just come in. You're used to seeing gold like that in your hands, in warehouses, in depositories, all securely held. Why has the price gone so high?
Yeah, Joshua touched on a couple interesting points already. I think main reason is geopolitics here. A lot of central bank buying that has been, gobbling up the gold globally here. A lot of Asian nations have been buying, but also European nations like Poland have stepped up to refill their reserves. Because we've seen the U.S. primarily throw Russia off or out of the SWIFT system, which was a bit of the trigger back in March 2022, where some of the central banks said, "Well, we have to protect ourselves. We cannot leave our money and our currency, our reserves, in the hands of others." So they started stockpiling gold and silver, gold primarily here, and hence we saw the increase in price. And recently we've seen a new buyer enter the market here as well, and that's Tether. It's the stablecoin company out of the US that is using proceeds from their T-bills and bonds that they hold. They're using the interest proceeds to purchase real assets, dominant or predominantly gold, but they're also buying farmland. And you might have seen headlines in the Financial Times the last few days that they were also interested in buying Juventus Turin. So they're trying to find a home for the money that's coming out of the crypto space that is now moving into gold. It's said that they're buying up to 3 tons a week right now, which is absolutely massive. And they're the largest buyer, even surpassing Poland right now.
Thank you, Kai. Ian, to you, the word I'm picking up here is uncertainty. All these geopolitical situations going on, the business world, companies, countries don't like uncertainty. Is that why we're seeing a big gold rush?
Yeah, absolutely. Kai made a very, very important point there, which is that the freezing of Russian assets post its invasion of Ukraine really brought home to central banks that you've got to have reserves in your own vaults. Poland, which he mentioned there, has been a key buyer. Poland, in fact, has been the biggest single buyer among global central banks over the last 18 months or so. Gold now currently makes up around 22% of the Polish central bank's reserves. They want to get it up to 30%, and they even repatriated some of it from the vaults in the Bank of England here in London because they actually wanted it on site in their own headquarters. So that's a key driver of demand there. Central bank ownership of gold is actually, it's about 32,000 tons now of gold globally. And I think the all-time high was about 35,000, which was back in 1965. So we're nudging record levels of central bank ownership of gold. As you say, it's all for geopolitical reasons.
And forgive my ignorance here, but anytime I read about people rushing for gold, it always means that it's a safe kind of haven for money, for wealth. This is what people pile into when they're worried about bond markets and stocks and everything else.
Yeah, I mean, a lot of this has actually been driven by the policies of the United States. I mean, the biggest single cause of geopolitical risk and geopolitical uncertainty right now is the US and its trade policies in particular. The US is allowing the dollar to drift on financial markets. Trump and his administration are very, very clear. They don't want people owning the dollar necessarily around the world. And traditionally, what's bad for the dollar is good for gold. And that is certainly a relationship that has held up this time around.
Thank you. Joshua, just come in on that. So people are moving away from the US dollar and piling into gold. Is that a fair assessment of what we're seeing?
Yeah, I would say that the motivations of your individual retail investor are going to be different to those of central banks and institutions. And so I think when we're looking at retail investors, right now it's about a lack of viable alternatives. Do investors put their money into the stock market, property, bonds? The markets hate uncertainty and unpredictability. And there's an inverse relationship between everything else that we expect to fall in value and the gold price increasing in value. I wouldn't necessarily say that we've got a collapse of the dollar. I think it's, from a central bank point of view, it's more about diversification. Many countries now are reassessing how much exposure they want to a single currency, that being, the dollar, under a single legal jurisdiction. But I think, and Ian touched upon it, the freezing of Russian reserves turned a theoretical risk into a very real one. And gold is attractive to central banks as a result of that because it doesn't have that counterparty risk. It's liquid. It sits outside that financial system if held domestically. And I think the biggest indicator of that is that Russian reserves have been sanctioned all around the world, but yet we know that one of the only net sellers of gold have been Russia. And so they've obviously needed to raise liquidity to for whatever reason. And the only way in which they've been able to do that successfully has been to sell gold.
Wow. Kai, just on that point, so Russia's assets being frozen, Russian individuals being sanctioned, a lot of money being frozen, that's why we're seeing gold being sold by the Russians off the back of everything that's happened over 4 years of war.
Yeah, absolutely. But they're also stockpiling silver on the other hand as well because it's cheaper to obtain, of course. So it was a massive signal that when Russia, I mentioned it earlier, was kicked out of the SWIFT system, and now the EU has sanctioned them and froze the other assets, the $210 billion that we've talked about. And gold is the only liquidity that they have. Of course, you could use diamonds, of course, as well as a source of liquidity, but nobody would purchase them from you. So gold is really the only viable option. And it's not cryptocurrencies. It is really the precious metals. It is gold and silver primarily. And gold has been the number one, currency for them to use here.
And Kai, you mentioned cryptocurrencies. I mean, you read a lot in the media about crypto. It's the future, everyone piling into crypto. I'm guessing there's a very good reason that central banks are not interested. They want to see what is worth having and what they can hold and physically see in their hands, in their vaults, and that's gold.
Yeah, 100%. But it's also about control on the crypto side. A lot of crypto investors value the independence, the same sort of value that gold offers you as well. Hence, we're in a digital world now. It's 2025. I do fully understand the reasoning behind owning cryptocurrencies, Bitcoin primarily, because it offers you that independence. Banks or the country, sorry, don't really mine their own cryptocurrencies. They seize them from time to time through criminal operations, but they don't mine their own cryptocurrencies, right? It is all gold can be obtained, it can be purchased in the market. But central banks don't step in and buy crypto. They'd rather issue their own cryptocurrencies or central bank currencies or central bank digital currencies, CBDCs. And I think the EU is very close to doing that already. The Fed has stepped back a little bit in the US, the US rather issues stable coins, while the EU is about to issue them very, very soon here, having just recently read one of their white papers. So it is a new paradigm that we're living in. I fully understand where digital gold comes from, but in the end, you do want to hold it in your hand and not just have it on a USB, perhaps.
Thanks, Kai. Ian, I see that one of the biggest buyers this year is China. Poland also really buying a lot of gold now and physically wanting it in Poland. But the Bank of England here in the United Kingdom has not really been a big buyer this year. Why?
No, it's not the only one that's really been absent from this big wave of buying. I mean, the European Central Bank has really not been involved in any of this at all. I think the ECB's lack of action is easier to explain than the Bank of England's. Which is essentially the ECB doesn't want to undermine the credibility of the euro as a store of wealth and as a credible reserve asset. And very interestingly, gold has this year overtaken the euro to become the second biggest holding among central bank reserves around the world after the US dollar. I touched on the dollar earlier on, but the euro, it appears to be the one that's really sort of suffered as a result of this to an extent. And that's why the ECB hasn't been buying. I suspect the Bank of England probably feels that it's got enough gold. I mean, the bank obviously has a whole range of reserves that it holds. There was an incident about in 2002, of course, when Gordon Brown famously
sold a
big chunk of the UK's gold reserves at the bottom of the market. I mean, that was the diversification play to which Joshua was referring there. He thought it would be better off for the bank to hold more euros, or as it was in those days. It was still the single currency unit, the ECU.
Talk to me about President Trump and his tariffs this year, because he has deliberately gone out of his way to create mayhem. Is there a risk that those tariffs and his policies are backfiring if people are retreating from the US dollar?
Well, they're not really working in terms of evening out trade imbalances, which was one of the prime reasons why he went ahead with these tariffs. I mean, if you take China, for example, obviously one of America's biggest trading partners, well, China has just announced its first ever trade surplus of $1 trillion. So China is still running these huge trade surpluses with the rest of the world. Germany, which traditionally ran a goods surplus with China, Germany is now running a goods deficit with China. So it hasn't really had that sort of impact. I mean, but there is a point that, I mean, Trump doesn't want people holding dollars to the extent that they have been. And that is part and parcel of this.
Thanks, Ian. Joshua, talk to me about your business then. What have you noticed this year? Has it been the kind of year you could only have dreamed about?
Well, in a way, it's the perfect storm. We've seen a 400% increase in demand for physical gold and also physical silver. We specialize in coins and bars that we deliver and we store on behalf of customers. And in the UK, investors can take advantage of the fact that if they're purchasing a UK gold coin, which is legal tender, they're not paying any capital gains tax on the gain. And so with so much conversation and talk, speculation over, tax increases and a lack of opportunity in terms of ISAs, what we've seen actually over the last couple of years is a widening of our typical type of customer. If you were to ask me, 5 years ago, our typical customer would be around, 55 to 70 years old. They would have a certain amount of disposable income in their bank account. They're probably, they retired or they've sold their own company. They're typically male, and they'd be at the high echelons of society. Today, with the fact that we're seeing so many black swan events and people are seeing it instead of having to read it in history books, the demographic has massively widened. We're seeing people purchase from income. We're seeing people that, everyday people, people that work as nurses or doctors or, operate our trains within, London Transport, for example. If people are left inheritance and they want to be a good steward of their money, knowing full well that inflation has been very, very topical over the last couple of years, I think inflation has almost pushed people into thinking about the fact that they need to do something, because by doing nothing, their wealth is slowly eroding.
Thanks, Joshua. Kai, just come in on the kind of year you've seen across the business then as you're talking to fellow experts in the field. Will 2025 go down in history as the golden year, to use a terrible pun?
Oh, 100%. It was the second best year after 1979, right? So absolutely, a lot of our investors, like we run an asset management firm and a mining equity fund as well, are piling into the precious metals now because they're understanding, and Joshua pointed out, they see the risk on the horizon geopolitically, financially. The world is drowning in debt as well, and investors are just looking for an alternative and maybe an exit out of the system as well. So we are seeing that interest increase. It's also about where do we store our gold and silver as well? Like, where is it safe to store it? Conversations about confiscation are popping up nowadays as well, because gold in particular could be used as currency again in the future if the world monetary system starts to crumble and potentially reset. We haven't really talked about China's gold holdings yet, and nobody knows really how much China owns. The official statistic is a little over 2,000 tons, but I think the real number is closer to 30,000 tons. And the question is, like, why do they keep it such a secret, and what are the plans there? And I think a lot of people are preparing for what is next. $38 trillion in debt in the US, $1.25 trillion in interest expenses alone every year is not sustainable.
So Kai, you mentioned China. You're pretty convinced they have an awful lot more gold than they've ever let on.
Oh, 100%, because they don't export any gold and they got some of the world's biggest mines in China as well. So where's all that gold going? And they're buying gold left, right, and center. They just bought more gold through one of their state-owned enterprises in Brazil, for example, from a Canadian major mining company, just getting more access to yearly gold production. So the question is, where does all that gold go? And I think it's a very valid question, because in the end, like, how do you destabilize a global monetary system? Well, you potentially bring out a new currency that is potentially gold backed, and that is something that I think is really, really, should be at the forefront of everybody's minds right now. What is happening in that on that front? So that's why there's a lot of interest.
Thank you, Kai. Ian, to you, I see Goldman Sachs are predicting that an ounce of gold next year could hit $5,000 US. I mean, these are crazy prices.
Well, I think their target for the end of next year is $4,900 an ounce. And then they said there was upside risk to that. So, yeah, it's perfectly possible. I mean, this inflation point that Kai raised is so important. The US is running a peacetime deficit of 6%. You only get rid of that through breakneck growth or you inflate it away. And the same is true of a lot of these other countries. You've got high debt to GDP ratios right across the developed world now. A little bit of inflation doesn't go amiss in getting rid of some of that. So you can see why people would hold gold. We haven't talked, incidentally, about ETFs, exchange traded funds, which is another way in which retail investors can gain access to gold. They can obviously buy bars and coins, as Joshua was saying, but another really popular means is by buying ETFs, which are a sort of collective investment vehicle. And I think demand ETF gold buying has been up something like 28% year on year. So that's clearly a very, very popular way of buying and holding gold as well.
Joshua, over to you. Just looking ahead to next year, I'm guessing you're hoping that 2026 follows on from a brilliant year you've had.
Well, for us as a retailer, we prefer stability and consistency. Yes, of course, when the gold price is increasing, it provides those that have just bought with gains, which is always nice. But the fact that the gold price increases at such a fast pace is normally an indicator of something else that's going on in the market, which is more or less undesirable. And so, believe it or not, we have customers who purchase physical gold for nothing more than a diversified portfolio. They'll have equities, they'll have bonds, they own property, they might own a company, and they purchase gold and they hope that the value of their gold doesn't go up too much, because if it does, it's an indication of a possible loss in some of the other assets that they're holding within their portfolio. And so, I think to agree with Ian, $5,000 an ounce is something that we hear a lot of customers talking about. And I think under certain conditions, if central banks continue to purchase, if yields continue to sit at the levels they're at the moment, and of course, every 15 to 16 months, we are surprised by something that we couldn't have predicted. I've never known black swan events to happen in such frequency, and so I would say that if you look at, and this is the other interesting thing, customers that are looking at the price of gold over the last 2 years are thinking that, well, what must go up has to come down. You've got people talking about a possible bubble. And of course, that's normal to kind of bring that up, and it's normal to kind of assess that based on the short term. But if we look at the chart over the last 50 to 100 years, the trend is far more stable, and gold tends to move in steps, not in straight lines. And so, it tracks inflation and currency debasement over time, and it doesn't go up forever. It goes up in steps. And I think what's driving people to purchase at the moment is more a case of emotion. People are lacking in trust in either government, institutions, the information they read and hear on social media or news outlets. And I think that's driving people to want something that's physical and something that's tangible, something that sits outside of the banking system. And we've actually seen a big drive from people that have traditionally held gold-backed ETFs to people that actually want the underlying physical metal in their hand, or stored in a vault that's kind of protected and, you know, sits outside the banking system.
Joshua, just as we go now, show us that gold in your hand. £110,000 worth for 1 kilo of solid gold today. What do you reckon that will be worth in 2026?
Well, if the experts are correct, then, you know, we're looking at, you know, possibly an additional 20% on top of that. So, you know, I wouldn't be surprised if it hits, you know, 135,000. That being said, you know, I also wouldn't be surprised if, you know, there is opportunity within the market. When we see, you know, when we see the gold price dip, that's when we tend to be our busiest. You know, there are lots of people sitting out on the sidelines waiting for those dips, and when they occur, we've got people purchasing for, you know, the next 10 years in terms of horizon.
Thank you, Joshua, to Kai in Germany as well, and Ian King here in the studio with me. Fascinating stuff. Remember, you can see more discussion and debate on our YouTube channel. Just search for Roundtable TRT World. But for now, from me, Enda Brady, and all the team here, goodbye, and thank you for watching.